The US and Canada have agreed to a trade deal, or perhaps a framework. It depends what word you want to use. President Donald Trump says the US will get magnets and rare earth minerals from China, and tariffs on Chinese goods will go to 55%. In return, the president says the US will provide China with, quote, what was agreed to, including allowing Chinese students to attend American colleges and universities. However, there have been limited details on loosening US export controls, particularly on the design and manufacturing of semiconductors. Montreal professional services firm WSP Global has signed a deal to buy a British consulting firm called Ricardo. That transaction worth $670 million, and it will increase WSP's presence in Britain, Australia, and the Netherlands. WSP also says it plans to conduct an ongoing strategic review of Ricardo's automotive, industrial, and performance products units. It says no decisions have been made, but this is likely to result in a sale of the operations. Shares in Lockheed Martin seeing some selling today. That's after the Pentagon cut its request for F-35 fighter jets for the Air Force this year in half. Analysts say the move is significant, given that Lockheed is the top U.S. defense contractor, and the cutback could indicate plans to reduce U.S. military spending. The F-35 program has faced questions about the need for manned fighter jets in an age of drones. TSX once again trading in record high territory, boosted in part by energy stocks today. We did see oil prices edging higher, but we are set for a record high close for the TSX. And let's have a look at the U.S. markets. A lower than expected read on inflation for May, encouraging investors. The S&P is still down, though, from its record high on February 19th of just over 6,144. The burden of the trade war on Canada's housing markets may be easing. We're seeing reports from local real estate boards that indicate home resale activity picked up in May in some markets that previously experienced a slowdown. Now, a de-escalation of the tariffs seems to have been a significant factor, and it may be alleviating fears on the part of homebuyers about economic fallout. Let's bring in Robert Hogue, Assistant Chief Economist at RBC Economics. Robert, thanks very much indeed for joining us. You're not calling for a huge bounce back in the housing market, but you are seeing signs of recovery.
Yeah, or signs of bottoming out at this point. We have to think of that the spring season, which is normally a very, very busy one, was very, very quiet this year, and more than likely it was because of all the uncertainty related to the trade war with the U.S. and the potential consequences, negative consequences on the Canadian economy. So it was, I would say in a way reassuring to see that some of the markets in Canada, including the Greater Toronto Area's activity appearing to move up a little bit from April. In May, so to us, it says that we're probably not in some kind of death spiral or anything like that, but that if confidence is rebuilding, we might see sort of the recovery that we had last fall kind of to get into motion again going forward and eventually kind of stabilize prices.
And you say essentially Toronto was paralyzed this spring. We saw home sale transactions tumbling to the lowest in decades.
Right, and that's obviously home buyers, and in this time of uncertainty, hit the pause button. It's no wonder that many potential home buyers decided to postpone their home buying decisions. But now, if some of the uncertainty is clearing, we might see more and more of those home buyers that went to the sideline gradually make their way back in the market. And whereas maybe some of the other markets like Vancouver, for example, it might not have been quite at the same stage in May. We saw our estimate that home resale might have declined slightly again from April to May. But generally speaking, it looks like things are stabilizing at this point.
Interest rates, obviously a crucial determinant. We've seen a pretty good slide in Canadian interest rates, but it has failed to really ignite a housing boom so far.
Right, but it did ignite the housing recovery back in the fall, right? And when we started to see home resale activity pick up, going in the latter stages of 2024 and even into January of this year. But it really is this kind of shock to confidence that we've seen since the trade war was initiated that took precedence amongst all the factors affecting the housing market. That's why we think that if the uncertainties start to clear and confidence starts to rebuild, the factors like the significant drop in interest rate and mortgage rates over the past year will kind of resurface and become a bit more prominent in terms of the buying decisions for potential home buyers, and will get the market going again. Again, we're not talking about or thinking about a snapback in the market or like a very sharp rebound, but much more kind of a stabilization at first and then gradual rebound going into the latter stages of this year. There's still a lot of uncertainty. A lot can happen on a trade war front, but it seems to us that like the worst case scenarios with respect to the economy might be getting a much lower probability today than just a few months ago, and that will hopefully inspire some home buyers to spring into action.
Just to close out, the housing minister, as you know, attracted some mockery because he was asked, well, are home prices going to have to come down to make houses more affordable? And he tried to square the circle there, saying, no, prices don't necessarily have to come down. What is your view?
Well, I mean, it'll have to be a combination of factors. Of course, I mean, if we're talking about markets like the Greater Toronto area, for example, in Vancouver, where prices are at extremely high level, to make those markets affordable for ordinary Canadians, it would require some significant price declines. Now, other markets across Canada, the starting point is much less severe. Home buying affordability is much more kind of approachable or within the realm of possibilities for many ordinary Canadians. And there, just stable pricing. If the economy, managed to do okay over the next little while, and household income continues to rise, then those markets could become a bit more attractive going forward from an affordability perspective.
And just finally, Ontario has a financial accountability officer who says housing starts in Ontario were at the lowest level since 2009. I mean, it sounds amazing, doesn't it, given the politicians' commitment to build more housing, but we're at the lowest in well over a decade. Right.
Thing is, our stuff, I didn't quite realize that it would be that stuff at this point. I mean, acknowledging that those housing starts can be quite volatile from month to month. But generally speaking, and there's a very interesting shift taking place right now towards purpose-built rental, something that was almost inexistent for decades. Now we're starting a bit more traction on that front. Including in Ontario. So I wouldn't be overly negative on the home building side of things, but clearly when you look at pre-construction home sales, which are, have been devastated over the last a little while, it does not bode that well for housing starts going forward, at least on the ownership side in condo and single detached homes.